GOP tax plan takes aim at NCAA season ticket deduction, publicly financed stadiums. Republicans in Congress unveiled their tax reform proposal Thursday, calling for a significant reduction in the corporate tax rate, the elimination of the estate tax and the creation of a 25% rate for people who pay corporate taxes through the individual code. Wealthier U.S. citizens often do this to reduce their tax obligation. According to the Congressional Joint Committee on Taxation, those three proposals alone will deplete the U.S. Treasury of nearly $1.5 trillion over the next 10 years, so the plan also offers ways to offset that reduction. Analysis: the GOP's bill is a sensible framework, but still a deficit-exploding tax cut for the rich and corporations. Two of them could have an effect on college athletic departments and cities that wish to use public funds to build new stadiums. The first involves a decades-old special tax rule that allows college sports fans to partially offset the cost of season tickets via a tax deduction, and it goes something like this. Many universities with top-level football and men's basketball teams require fans to make a donation to their school's booster club before they are allowed to purchase season tickets. At North Carolina, for instance, anyone who wishes to purchase season tickets for the Tar Heels men's basketball team must first donate at least $6,000 to the athletic department's Rams Club. And that's just for the right to buy 2 season tickets. For 4, it's a $25,000 donation, that's on top of the actual cost of the tickets. But here's the catch: while the price of the tickets is not tax-deductible, up to 80% of that initial donation is. Explainer for Republican tax bill name drops Warriors' Stephen Curry. As noted by the News and Observer, booster clubs often entice potential season ticket buyers by reminding them of this tax deduction. North Carolina State's Wolfpack Club lists the deduction as the very first donation benefit. The ticket tax deduction, which dates to the 1980s, has been in Congress's crosshairs for years, and the GOP proposal released this week seeks to repeal it. According to a 2012 Bloomberg story, eliminating the deduction could add $1 billion per year to the U.S. Treasury. The second GOP proposal would forbid state and local governments from issuing tax-free bonds to help pay for new professional sports stadiums, a common practice often derided as welfare for billionaire sports owners, according to the News and Observer. The plan, similar to one advocated by President Barack Obama in his 2015 federal budget proposal, also calls for the interest on such bonds to be subject to federal taxes, increasing revenue by $200 million through 2027. According to a recent Brookings Institution study, 36 of the 45 stadiums built or renovated for teams in the 4 major U.S. pro sports leagues since 2000 utilized tax-exempt bonds, costing the federal government $3.7 billion in lost tax revenue. The new Yankee Stadium alone accounted for $431 million of that total. Nearly $1.7 billion of its $2.5 billion construction cost was financed by tax-exempt bonds issued by New York City, Bloomberg reports. Victor Matheson, an economics professor at College of the Holy Cross who has studied stadium finance, told Bloomberg that eliminating tax-exempt bonds for stadium construction would hardly be the end of new arena construction in the United States. It's the difference between paying 5% on your mortgage and paying 7% on your mortgage, Matheson said. Obviously that makes a difference, but if mortgage rates jump 2 percentage points, it wouldn't mean the end of housing. For more on the tax bill. GOP tax plan would shrink mortgage interest benefit, / corporate tax rate. Republicans' tax plan is starting out against some serious headwinds. The Finance 202, some corporate interests swiftly align against